Good morning, students. A very good morning to all of you. So, कैसे हैं सब आप लोग, guys? So, students, we are doing chapter 5, audit of items of financial statements. And so far, we have covered following things. We have understood how to verify trade receivables, how to verify cash and cash equivalents, inventories, loans and advances, other current assets, trade payables, and other current liabilities. We have also understood disclosure requirements of these items in accordance with Schedule 3 of Companies Act 2013. So today we shall be covering more items, liabilities items, assets items we have already done. Okay, guys, so straight away we shall be going to your module. So students, we are at page 5.27 of your module. Page 5.27 of your module. So first of all, we shall be studying about borrowings. Now, how borrowings are reflected in financial statements of a company? What is their nature? And how does an auditor verify such items? So students, borrowings, you very much understand that borrowings can be from bank in form of loans. These can be debentures, which are borrowings of a company from public. So all these are in nature of borrowings. So borrowing, students, you can very well understand that borrowings can be long term or short term. Okay. So short-term borrowings are those borrowings which are expected to be paid by the entity within a period of 12 months or within its operating cycle. And long-term borrowings are those borrowings which are likely to be paid by entity after a period of 12 months or beyond its operating cycle. So if a borrowing is short term, then it is classified as a short term borrowing. And if it is long term, then obviously it is going to be classified as long term borrowing. So students, here an important point for all of you to remember is that as far as borrowings from banks are concerned, working capital credit facilities these are always classified as short-term borrowings. Remember, students, that working capital credit facilities, these are always classified as short-term borrowings. Now, many of you would be wondering what are working capital credit facilities. So these students, you would be reading in detail in your chapter on bank audit. So for here, you can understand that working capital credit facilities are those credit facilities which are granted by a bank to borrower for meeting its working capital requirements, for meeting its day-to-day requirements, like for for purchasing the goods, for incurring factory expenses. So all these kind of requirements are met by an entity, by a company, through use of working capital credit facilities. These are short term in nature, and these are repayable on demand. These do not have a fixed time period for repayment, like in, say, in case of term loan, like when a company avails a term loan from a bank, then obviously it has got fixed payment schedule that this loan is to be repaid, say, in 60 installments, or in 5 years, or 7 years. But working capital credit facilities are repayable on demand. These are renewed every year. Okay. So this point, students, is important from your examination point of view. And working capital credit facilities in India, these are called as cash credit loans. Cash credit loans, or CC limits. So this is a little practical aspect, but students, you have to keep in your mind, and this aspect is important from your examination point of view. Yes, students. So my audio video is clear. Yes, guys. My audio video is clear, students. Yes, confirm me. Yes. Okay. So again, students, what do borrowings reflect? Borrowing is again an account balance. It is a balance sheet item. It is reflected under the head liabilities. So it is an account balance. So all assertions which apply to account balance, these apply to borrowings. Okay. So what are the assertions which apply to account balances? Again, all the four assertions: existence, completeness, rights and obligations, and valuation and allocation. So an auditor is concerned with existence of borrowings, that whether borrowings exist, whether the amount reflected in the financial statements as borrowings is genuine, whether in fact it exists, and about their completeness, whether everything which was supposed to be recorded under the head borrowings, it has been recorded, whether the information recorded is complete and nothing is left out. And the obligation is an assertion which obviously flows from a liability, that the if borrowings are reflected, that then that entity has to pay the money to that creditor, to that bank. Okay. And what about valuation and allocation? Valuation means that borrowings are valued properly. Okay, so these are valued properly. So all these things, students, a an auditor can verify by employing various audit procedures, like suppose in case of borrowings from bank. So obviously, what would the auditor is going to verify? Which procedures can he apply? Yes, anybody? Yes, students, without seeing to your modules. So if there are borrowings from bank, what audit procedures can auditor apply? What audit procedures can auditor perform without seeing from your module, just from your own common sense point of view? Simple logic. Yes. So students, if you understand about the nature of something, then you need not cram. So you already know what is the nature of this particular item. So I have to apply this kind of audit procedures. So logic and common sense will prompt you to write the correct audit procedure. Okay. Yes. That's good. Inspection of loan agreements, Ruturaj, Suman Goel, direct confirmation from banks. Yes, that's also correct. Sangeeta, financial statements of a bank. No, that can't be the audit procedures employed by the auditor of an entity. We are talking about a company which has taken loan from a bank. We are talking about bank borrowings which are reflected in the financial statements of a company, in the financial statements of an entity. So what the auditor is going to see, what the auditor would see by verifying the balance sheet of the bank. Here in balance sheet of bank, the figures would be in thousands of crores relating to all the loans and advances given. It won't show that this bank has given so much 20 lakhs to Mr. X. Okay. So the most important thing for the auditor to verify various assertions relating to borrowings is inspection of loan agreement or verifying sanction letter. Obviously, sanction letter would be available with the client. So it would confirm that XYZ bank has sanctioned certain amount to the entity, to the company. Okay, it would prove the existence of that borrowing. So the auditor can also check loan agreement copy. That's also true. Okay. Roll out and obtain independent balance confirmation. So like in case of other um items, the auditor can see confirmation from the bank that whether these borrowings exist, what is their balance. So direct confirmation is also an appropriate procedure. So students, you would see that many procedures here are general. So when you have gone through this chapter once or twice, you would form a uh, your own bank of procedures. You would form your own storage house of procedures. Okay. So that's very important, students. So agree details of lease and hire purchase creditor, two underlying agreements. Say if the company has taken some borrowings, has got some asset financed under some lease agreement or under hire purchase agreement, then those agreements have to be seen. And in case of debentures, examine trust deed for terms and dates of redemption, borrowing restrictions, and compliance with agreements. So, students, you have done debentures in your company law classes? Yes. Yes, students, you have done debentures in your company law classes. Yes, confirm, guys. You have done debentures in your company law classes. So, debentures, students, debentures are again a form of borrowing by the company where company raises money from the public in the form of loans, and the company has to pay interest on these borrowings, on these debentures. So these are debentures are usually long term. So debentures are usually long term, where a company raises money from the public in the form of loans on a for a longer period. So there are provisions in Companies Act which state that when debentures are to be issued to persons beyond a certain threshold, then a debenture trustee is to be appointed. Then a debenture trustee is to be appointed. So, who is a debenture trustee? His functions of debenture trustee include protecting the rights of persons who have invested in the debentures of the company. So, where such rights and duties, obligations are contained, these are contained in debenture trust deed. Okay. So in case debentures have been issued and such provisions apply, then the auditor can examine debenture trust deed. So simply understand that debenture trustee is a person who has a duty to protect the rights of investors, and all these terms and these duties are mentioned in debenture trust deed. So the auditor, it is a document, so the auditor can examine the debenture trust deed. As simple as that. सिर्फ ये आपको पॉइंट दिमाग में रखना है कि in case of debentures the auditor has to examine debenture trust deed. इतना सा आपके दिमाग में रह जाए, it is sufficient for writing in the exams. You will get 1 mark for this procedure. Okay. When debt is retired, say when the loan has been repaid, then examine that necessary certificate has been obtained from the bank, that discharge has been received. Okay, so all these kind of things, students, and to see that all the borrowings which are reflected in the financial statements of the company, these are complete, that all the borrowings have been accounted for in the books of company on a timely basis. So obviously, what the auditor shall do, he shall verify the schedule of borrowings. He shall verify it with the books of accounts, see the opening balance, additions made during the year, and repayments made. Okay, and he would also verify that whether any additional loans, additional debt obtained during the year, it has been properly reflected, it is accounted for in the books of accounts. So these things, direct confirmation procedure is common in both. It also goes to show completeness of the borrowings. So when you are sending a direct confirmation request, when you are seeking confirmation from a banker, it not only shows the existence of that borrowing, but it also shows that borrowing is complete, because the banker would be confirming the balance. Okay. The liability is recorded at the correct amount valuation. So obviously the auditor would be seeing that liability is recorded at the correct amount. It is properly valued. So what does it mean in case of in case of borrowings? That all interest and all charges, these have been properly recorded. Say, or in case of foreign currency loans, the amount has been restated in accordance with the accounting standard, that is AS 11. So this point I have been telling you, students, in valuation head, wherever balances appear, you can write this amount. This fits everywhere, AS 11. Okay. So other are also general procedures which are also related to the disclosure requirements of borrowings under schedule 3. Okay, so first we shall see disclosure requirements of borrowings under schedule 3. These are very important, students. Disclosure requirements under schedule 3. In fact, students, there is a question in your November 23 exams, that how short-term borrowings are disclosed in accordance with the Schedule 3 of the Companies Act. So this question has come in your November 23 exams. So disclosure requirements, as students, I have been telling you, these are very important, and these you have to learn by heart. Okay. So what are disclosure requirements of borrowings? So for long-term borrowings, there are separate disclosure requirements, and for short-term borrowings, there are separate disclosure requirements. So long-term borrowings shall be classified as bonds, debentures. So bonds, debentures, these shall be classified separately under the head long-term borrowings. Now, why these are classified under long-term borrowings? Because these have longer repayment period. These are not expected to be paid within a period of 12 months. So debentures are usually paid in, say, 15-20 year period. So these have These have long repayment period. So second is term loans. So obviously, if the company has taken some term loan from a bank or from some another entity, then it has to disclose it separately. So term loan from bank and term loan from other parties. So students, again, you would be reading in detail about term loans in your chapter on bank audit. For the time being, you can understand that it is a loan which is repayable in more than 3 years. Okay, so like when a company say purchases when a company purchases some machinery and it has obtained term loan from a bank. So it is an example of a term loan. The installments of a term loan are normally payable for in a period of more than 36 months, say 48 months, 60 months, and so on, 7 years. So it has got a long term repayment schedule. So that is why it is reflected as a long term borrowing under for borrowings. Okay, and term loans shall be classified from banks and from other parties. If say term loan has been taken from another party which is not a bank, like say an NBFC. Okay, deferred payment liabilities. So deferred payment liabilities, again students, these you can understand to mean uh, when payment is deferred over a period. Say I would pay some amount after 1 year and some amount after 2 years. So these are deferred payment liabilities. Deposits. So students, you have read about deposits in your company law classes. Deposits which are accepted by a company, which can be accepted by a company. Have you read about it in your company law classes? Yes. Yes, students, have you read about deposits in your company law classes? So the provisions are of deposits which are raised from the public are contained in your Companies Act 2013. I think these are contained in section 73 onwards, like that. So again, deposits are to be separately classified, students. Deposits are to be separately classified. Loans and advances from related parties. So if from related parties the company has taken some loans, then these are also to be disclosed separately. So this is a disclosure requirement pertaining to related parties. Okay, so long term maturities of finance lease obligations. So in case of finance lease, uh, these students, you have done AS 19, I think. So when a lease is a finance lease, where risk and rewards relating to ownership are substantially transferred. So long-term maturities of finance lease obligations, these are also separately shown, and other loans and advances. So quickly, students, important points for you to remember under the head long-term borrowings is that these are to be classified separately for debentures, for deposits, for term loan from banks, term loan from others, and loans and advances from related parties. These are important points, and these you should never forget. Okay, so these are to be emphasized upon while you are preparing for this chapter. So borrowings shall further be subclassified as secured and unsecured. So while classifying borrowing, students, you have to classify these as secured or unsecured. Okay, so secured borrowings mean where the company has provided some security for availing that borrowing. Okay, and unsecured borrowings are sort of clean borrowings where no security is provided, and where security is provided, nature of security shall be specified separately in each case. Say like a company has taken loan against the machinery, so machinery is the security, it is the primary security. So so in the schedule of long-term borrowings, it would be stated secured against this machinery. Okay. So where loans have been guaranteed by directors or others, the aggregate amount of such loans under each head shall be disclosed. So this is also a mandatory and important requirement, students, that where loans have been guaranteed by directors, the aggregate amount of such loans under each head. Say if a term loan has been guaranteed by the directors, then it has to be stated that this loan has been guaranteed by the directors. It would be written in the schedule of borrowings. It would be written in the schedule of long-term borrowings that this loan has been guaranteed by all the directors, or if it has been guaranteed by others, then by whom it has been guaranteed. So it is a normal practice, students, that when a company takes loan, the loan is guaranteed by its directors. Okay. So bonds and debentures. So for debentures or bonds, it would be written, it would be disclosed that say debentures have been issued with so much rate of interest and particulars of redemption, that what is the period of redemption, what is the rate of interest on the debentures, this shall be disclosed. This is a mandatory disclosure requirement under Schedule 3. Okay. So this shall be stated in descending order of maturity or conversion, starting from the farthest redemption to the nearest resumption. So the debentures which are farthest, which are longer in time period to be repaid, these are to be stated first, and others which are nearer to the date of redemption, these are to be shown thereafter. So in the descending order of the maturity. So the debentures which have a longer maturity, these would be shown first, and later on other debentures would be stated. Okay. So these kind of things. So terms of repayment of term loans shall also be stated. Like when a company has taken a term loan, then it would also be stated that loan is repayable in so much months or in so much years. So this is again a mandatory schedule 3 requirement. And other long term liabilities such as trade payables and others. So if there are some trade payables which are not expected to be paid within a period of 12 months or within the operating cycle of the company, then these would be classified as a long term liability and not as a short term liability. So understand, guys, that trade payables are normally a short term liability, and these are shown under current liabilities, but it can become a long term liability if it is not expected to be paid within a period of 12 months. Okay. So similar requirements are there for short term borrowings also. So short term borrowings shall be classified as loans repayable on demand from banks, from other parties. So all the loans which are repayable on demand, which are repayable at any time on demand by the bank, these are classified as short-term borrowings. So I have given you the example of cash credit limits. Practically, so cash credit facilities, working capital credit facilities, these are examples of loans repayable on demand. Say if these have been taken from banks, so obviously it would be shown that so much loan has been taken from bank, which is a loan repayable on demand. And if it has been taken from any other entity which is not a bank, then it would be disclosed separately. Okay. Loans and advances from related parties. So loans and advances from related parties, again this requirement was there in long term borrowings also. So it is here in short term borrowings too. So if the company has taken loan from a related party and it is expected to be paid within a period of 12 months or within the operating cycle of the company, then it has to be classified as a short term borrowings. Okay. So deposits, if these are short term in nature, other loans and advances. So loans and advances which are not from related parties, these are to be disclosed here. Okay. So the requirement, students, of long-term borrowings and short-term borrowings, you can see that these are more or less similar. So if you remember one type of disclosure requirements, 90% of disclosure requirements of other head would be automatically covered. So again, borrowings shall further be classified as secured and unsecured. Nature of security shall be stated. Again, similar requirement as in case of long-term borrowing. where loans have been guaranteed by directors or others, so it has to be also separately stated. Again, similar requirement. So period and amount of default as on the balance sheet date in repayment of loans shall be specified separately. So if there is a default in the loan borrowings, so this was also there in case of long term borrowings, students. Then period of default, period and amount of default, कि कितनी इंस्टॉलमेंट्स पे डिफॉल्ट है और कितने पीरियड के लिए, इट हैज आल्सो टू बी स्टेटेड सेपरेटली. And current maturities of long term borrowings shall also be disclosed separately. So if there are certain long term borrowings, then how much money is to be paid in the next 12 months. So this is what we call as current maturity of long term borrowings. So this would be also disclosed separately under short term borrowings, because it is expected to be paid within a period of 12 months. So where the company has not used the borrowings from banks and financial institutions for the specific purpose for which it was taken at the balance sheet date, the company shall disclose the detail where these have been used. Say if the company has taken a specified term loan from a bank for a specific purpose, but it has not been used for that purpose, then the company shall disclose that where this loan amount has been used. So this is again a mandatory requirement, students, to highlight the cases of diversion of funds. So here the first responsibility, first obligation is cast upon the company management itself. So first responsibility is cast upon the company itself, upon its management, to disclose whether such a situation exists. Yes. So students, many of you are writing, Rahul Sharma, you are also writing that disclosure part is huge. Do we need to remember it? Rahul, as I've been telling you earlier also, disclosure part of Schedule 3, you have to remember it as a separate chapter. As a separate topic. See, the best way to remember disclosure part is that you open Schedule 3, you go through the format of balance sheet, you go through the format of presentation of financial statements in Schedule 3. So this Schedule 3 is there in your accountancy module, and I have also uploaded it in the very first lecture. So when you go through it once, twice, thrice, you would find many similar things. Like there would be many similar things in respect of trade payables and trade receivables and loans and advances on the asset side. Similarly, when you remember disclosure requirement of borrowings, so there are many similar things between short-term borrowings and long-term borrowings. सो स्टूडेंट्स, देखने में ये बहुत बड़ा लगता है क्योंकि ये लॉ की रिक्वायरमेंट है, तो लॉ की रिक्वायरमेंट में तो हर एक चीज का सेपरेट डिस्क्लोजर दिया है जैसे कि कंपनी को देना है. बट फ्रॉम एग्जामिनेशन पॉइंट ऑफ व्यू, when you would go through it once or twice, you would find that there is a pattern in it. That for remembering Schedule 3, there is a pattern in it. If you do not remember disclosure requirements of Schedule 3 from Schedule 3 itself, which is there in your accountancy module, and if you try to remember a separate Schedule 3 requirements from this chapter, then you would be doing the things in a broken way. Then you would be doing the things in a disjointed manner. Okay, so it would not give you desired results. It would not provide you desired results from your examination point of view. So as far as your examination is concerned, okay, so Rahul, it is important for you to remember Schedule 3 requirements separately as a topic. So I would say treat it as a separate chapter, that I have to remember requirements of Schedule 3. It is a separate chapter. It is also there in your accountancy syllabus. So why not do it right now? Okay, so anyway you have to remember it, because if you skip Schedule 3, so इस चैप्टर का तो राहुल बेड़ा गर्क होगा ही होगा. आपका अकाउंटेंसी में भी आपको इससे नुकसान होगा, क्योंकि Schedule 3 रिक्वायरमेंट से के कंसर्निंग जो क्वेश्चंस हैं वो कई एमसीक्यूज में भी बहुत अच्छे क्वेश्चंस बनते हैं, केस स्टडीज में भी बनते हैं और डिस्क्रिप्टिव में भी बनते हैं. ओके, so is it clear to you, Rahul? Yes, you are saying it is clear. So do not get frightened, Rahul. I would say do not get frightened by the length of Schedule 3. So if you have understood the basic points, so it would be easy for you to remember. Say I'll tell you a technique to remember Schedule 3. Okay, let us do it. So say if you are remembering disclosure requirements pertaining to borrowings as contained in Schedule 3. So first keep in your mind nature of that item, कि borrowings का मतलब क्या है. So आपने दिमाग में डिस्क्लोज कर लिया, पिक्चर बना ली, that borrowings can be borrowings from banks, मोटा मोटा broadly, and these can be borrowings from these can be in the form of debentures, these can be in form of deposits. तीन चीजें तो आपके दिमाग में क्लियर है. तो अगर बोरिंग्स तीन टाइप्स की ये हैं ब्रॉडली, then obviously these have to be disclosed separately. तो 3 पॉइंट ऑटोमेटिकली आपके कवर हो गए. 3 points are automatically covered, that these would be classified as debentures, these would be classified as loans from banks, term loans from banks, and these would be classified as deposits. And then you would also keep in mind that when loans are availed by a company, the entity normally gives some security, that it provides some security to the lending institution, to the bank. So obviously the security has to be disclosed separately. If it is a long-term borrowing, then repayment terms in how much years loan would be repaid, that would also be disclosed separately. And as I've been telling you, loans are guaranteed by directors normally, so these would also have to be disclosed separately. So these are important things. Say if the and related to loans is the amount of default. If the company has made a default, then what is the amount of default and what is the period of default? This has to be disclosed separately. So if you understand the nature of that item, if picture of nature of that item is clear in your mind, you can remember disclosure requirements very easily. By remembering it once or twice, you can remember it. You need not cram it. Yes. Yes, Rahul, is it clear to you? Yes. Is it clear to you, not only to Rahul, but to all other guys, students? Is it clear to you how to remember disclosure requirements of Schedule 3? How to remember disclosure requirements of Schedule 3? Is it clear to you? So whatever I have spoken in Hindi, I would also translate in English. Yes. Yes, Mr. Yerva Reddy. So, for your convenience, whatever I have spoken in Hindi, I would also translate it in English. So, I have said that Schedule 3 requirements have to be remembered as a separate topic, as a separate chapter. So, this you can do it from your accountancy module, where Schedule 3 is provided in Module 3. It is provided, it is given in Module 3. You can download it, and or you can see it from your Module 3 book of accounts, and you try to study it as a separate topic. You understand what is the format of the balance sheet, how the balance sheet of a company is presented, what are different heads. Then in one head, you understand what, first of all, what items are included in that head. What is the nature of that head? Okay. So once you understand what items are included in that head, what is the nature of that particular head or subhead, then you can then it would be easy for you to remember disclosure requirements as contained in Schedule 3. So even if you forget some points, it's okay. You are not likely to make a mistake on this count. Yes. So clear, guys? So there are certain additional regulatory information, students. There are certain additional regulatory information which is to be disclosed in the financial statements pertaining to borrowings. So where the company has borrowings from banks or financial institutions, and students, I would like to add one more point. Still we are in the process of completing first part of audit. That is your first module. So it is going to be completed in this month. This chapter would be over. So with the completion of this chapter, we shall be completing your module 1. So more than 55% of your syllabus would have been covered. But module 2 is still left where there are reporting requirements, where there is a chapter on bank audit. So when you would be going through those chapters, so these points again, which are appearing in chapter 5 here, these would become for you more easy to understand. You would be more familiar with these terms, with these requirements after reading module 2. Like you are now familiar with assertions. Before you were uh, before you were earlier, you at the start of chapter 1 or in chapter 4, you were not so much comfortable with assertions, but you so when you would be reading module 2, many of the things of this chapter would be more clear. You would be more accustomed with these terms. Okay. So where the company has borrowings from banks or financial institutions on the basis of security of current assets, it shall disclose the following. So when does a when does a company take a loan on the basis of security of current assets? What type of such a loan is known as? Yes, anybody? Say students, when a company is taking loan on the basis of security of its current assets, means it is taking loan against security of its stocks, inventories, its receivables, its book debts. I have told you working capital credit facilities. Cash credit loans, cash credit facilities. So where the company assets, it shall disclose in agreement with the books of accounts. If not, summary of reconciliation and reasons of material discrepancies are to be adequately. Video clear, Avinash? So understand this point, students. When a company regarding information on value of current assets, okay, so it may have to be filed every month or every quarter, depending upon the terms of sanction. Yes, yes, tech team, the video is buffering. Please see. Yes, yes, students, is it clear now? Yes, guys, is it clear now? Please confirm so that we can start. Yes, yes, please reconfirm. Yes, Swati. Yes, Swati, Ankur, Sham Goel. Please confirm whether now the audio video is clear. Is the lagging problem resolved now? Yes, yes, students, please confirm. Yes, now you are writing it's clear. So students, we were talking about uh, when a company has taken loan on the basis of security of current assets, where loan has been taken on the basis of security of current assets. So like where primary security is inventories, where primary securities are inventories, book debts, debtors of the company. So when the company takes loan on the basis of security of current assets, on the basis of say inventories, on the basis of debtors, then these type of facilities are called as working capital credit facilities. Okay. And example of working capital credit facilities is cash credit loans, cash credit limits, which we usually call these such practically. So when the company has taken loan on the basis of security of current assets, then normally there is a condition imposed in sanction letters given by banks to provide a monthly or quarterly statement of the current assets, that what is the value of those current assets on the basis of which the loan has been provided. So such statements may be in the form of stock statements. So again, about this thing you would be reading in your chapter on bank audit. Okay. So in such cases, the disclosure requirement is that company has to state whether the quarterly statements filed with the banker are in agreement with the books of accounts, whether these show the same position as it is reflected in the books of accounts. Okay. If not, if there is a difference, then reconciliation of the same has to be given and reasons of material discrepancies have to be provided. Clear, students? So where company these all these requirements, students, additional regulatory information, all these requirements have been added in Schedule 3 by way of amendments about 2 years back. About 1-2 years back, these amendments were added. These were earlier not there. Okay. So willful defaulter, where a company is declared a willful defaulter by any bank. So who is a willful defaulter, students? You understand this much, that willful defaulter is a person who has the capacity to pay, but he doesn't pay the money to the bank. Who has the capacity to pay, but doesn't pay money to the bank. Or there is another aspect to it, that if some money, if there is some diversion of funds and money has been used for some other purpose than for which it was granted, so it may also fall in willful defaulter category. So when a company is declared willful defaulter by any bank, now bank has to declare that that company is a willful defaulter, then following details are to be given. Date of declaration as willful defaulter and detail of defaults. So these two things are given. Yes. So page number is 5.35. Page number is 5.35. Yes, Devraj Ji, we are at page number 5.35. Registration of charge or satisfaction of charge with the company. So this point also we had done, students, while we were doing a case study, probably on chapter 4. So I had there also told you that there are provisions for registration of charge or satisfaction of charge with the registrar of companies. So whenever a company takes loan, so it has to register the charge by filing a form with registrar of companies on MCA portal, on MCA Ministry of Corporate Affairs portal. So the form name is CHG1. Okay. So when a company takes loan, it files a form, then a charge is created. It shows that there is a charge on that assets. That first right on those assets lies with the lending institution, lies with the bank. Okay. And when loan is repaid, this charge has to be satisfied. Then again, another form has to be filed, which goes by the name of CHG4, which shows that now the company has repaid the loan, and that particular liability is clear now. It has been liquidated. Then again, this form is to be filed. Okay. So where any charge or satisfaction of charge yet to be registered with the registrar of companies beyond the statutory period. So if a charge which was required to be filed within the period prescribed under law, which you would be reading in your Companies Act, is pending, or if it is not satisfied and the statutory period has gone beyond the statutory period, then those things have to be disclosed. Okay. Yes, Soman Goel, you are stating you have read registration of charge and satisfaction of charge yesterday only. So that's great. So आपका जो आपने कंपनीज एक्ट में पढ़ा वो आपका इधर भी रिवाइज हो गया. So whatever you have read in Companies Act, it is revised here also. So you can relate, you can correlate, you can analyze provisions of Companies Act 2013 in relation to Schedule 3 requirements. Okay. So utilization of borrowed funds. So students, this is also a new requirement. So this whole regulatory requirements, these were added by way of amendments, as I've been telling you. So there is another requirement that if the company has given loan, okay, or invested funds with any other company, including foreign entities, with the understanding that the intermediary shall directly or indirectly lend or invest in other persons in any manner on behalf of the company. So the point wants you to state that if the company has invested the money, okay, with any other person or including some foreign entities which it is referring to as intermediaries, okay, on the understanding that this money which the company is advancing to that particular entity, to that particular intermediary, it would be further invested on the company's behalf. Okay. Then if such an understanding is there, then it has to be disclosed separately. Okay. So similarly, if any guarantees have been provided on the behalf of ultimate beneficiaries, means the company itself, so the company shall disclose the following things: date and amount of fund advanced, with complete details of such inventories, date and amount of guarantee security provided on behalf of ultimate financiaries, whether provisions of necessary acts, FEMA and PMLA, these have been complied with. So this is what you have to remember. Okay. So similar requirements are there in respect of receipt of funds. So where a company has received any fund from any person, including intermediaries, with the understanding that the company shall invest such funds on behalf of the party from whom funds were received, which in such case would become ultimate beneficiaries, then again such kind of disclosure requirements are there. Okay. So similar disclosure requirements are there. In respect of funds paid, funds advanced, and in respect of funds received. Okay. So स्टूडेंट्स, ये एक दो बार आपको पढ़ना पड़ेगा, उसके बिना समझ नहीं आएगा. एक दो बार पढ़ना पड़ेगा पहले इसको अच्छी तरीके से, फिर आपको समझ में आएगा. So स्टूडेंट्स, एक ये टेस्ट योर अंडरस्टैंडिंग भी देख लेते हैं. लेट अस सी टेस्ट योर अंडरस्टैंडिंग 2. So a company has availed a cash credit facility of rupees 2 crore, outstanding balance of 2 crore as at year end, from a bank for meeting its working capital requirements against security of stock and debtors and guaranteed by directors of the company. This we have been talking about. Say the company has taken a cash credit facility of 2 crore and the balance as on 31st March is also rupees 2 crore. So the cash credit facility has been taken against the security of stocks and debtors. So what is the security for taking for availing these cash credit facilities? It is stock and debtors. So what are stock and debtors? These are current assets, and these are guaranteed by directors of the company. Discuss how the above cash credit facility would be classified and disclosed in financial statements of the company. So you have to state, you have to write in the answer that how this particular credit facility, how this borrowing which the company has taken from a bank, it would be classified in the financial statements of a company. Now tell me, students, what we have learned without seeing the answer, without referring to the module. Just tell me from your common sense point of view. First, tell me whether it is a short-term borrowing or it is a long-term borrowing. Yes, let's do it right now. Whether it is a short-term borrowing or it is a long-term borrowing. Yes. In this example given in this question, whether it is a short-term borrowing or it is a long-term borrowing, how it would be classified? Yes. Suman Goel, Anmol Patwa, Prince, all of you are right. So it is a short-term borrowing. Why? Because it is a cash credit facilities and it has been taken on the basis of security of current assets. So it is a loan repayable on demand. So we have learned that such kind of loans are always classified as short-term borrowings. Okay. Yes, Manish. Vaishali, Belua, all of you are right. You are saying short-term borrowings. Faizan, yes. Ankur, Swati. So these are short-term borrowings. So obviously, these would be classified as short-term borrowings and it would be disclosed in the financial statements that these credit facilities have been taken against the security of stocks and debtors, and these have been guaranteed by by directors of the company. So this is what you have to write. So the answer of question is available in the question itself. So students at intermediate level, uh, the basic application skills are tested, not advanced application skills are tested. Although in your syllabus, although in your module there may be many things, but as far as examination is concerned, normally the paper is quite balanced and certain basic things are tested. It is expected from you to know that you have a basic understanding and you have got some basic application skills also. And advanced knowledge is not, it would be expected in CA final. Okay. So, but the point is that students even do not grasp this basic knowledge also, and they forget what is fundamental, what is important in whole this concept. So students, you have to develop an ability to understand, to go क्या चीज important है, क्या चीज significant है. This you have to understand. Yes. So clear, guys? Yes. So students, we have completed borrowings. So अभी आपकी क्वेरीज ले लेते हैं बोरिंग्स के बारे में. स्टूडेंट्स क्या है? Yes, Srinivasan Venkataraman, you are saying we can solve past year question paper and MCQs from study material. Yes, will do. Srinivasan, MCQs and correct, incorrect, descriptive questions relating to this chapter, we shall try to do at the last session of this chapter. Okay, so that your understanding is increased and you know the pattern of question and that what kind of questions are coming in your exams. Yes. Is there any difference between loan and borrowing, Prince? So these are similar terms, but Prince, I would say borrowing is a more broad term than loans. Borrowing is a more broad term than loans, and borrowings include loans. Yes, Priyanka, your question is also answered. You are saying, why did we say borrowings instead of loans? Because it is classified as such in Schedule 3. Borrowings is a more broad term. That is why probably the term borrowings have been used. Okay. You are saying your marks have improved, but Nukul, your performance is still not satisfactory. 36 marks in auditing is quite poor. So you have to work hard. You have to work hard. So if you are talking about May 23 attempt, probably you got 36 in May 23. Yes, Nakul. So that was a damn easy paper, Nakul. May 23 exam was damn easy paper. And many students scored more than 60 marks in that paper. Talking of some another attempt. Yes. Yes, Santosh, how to prepare for exams effectively. Again, we have discussed it so many times. आपको मॉड्यूल खोलना है understanding you have gained by watching the lecture, by hearing the lecture, then you have to establish it in your minds and you have to remember the things. Be it any subject, be it income tax, be it accountancy, or be it auditing, any subject. You have to first you it is a it to be a tremendous task remembering. The moment you ask them to remember, they would say, we do not remember how you are going to write. You then you need to practice again, cross check and again practice. And repeat this cycle for 2 times and everything is sorted. But if you think that without remembering you can write in the exam from your own understanding, then I'm uh, yes, Parth Rana, you are saying bonds and debentures which are included in long-term borrowings when we are recording in financial year, which is just 1 year. So these will be shown as current maturities of long-term borrowings. Yes. Goal you are saying, do companies really disclose diversion of funds? Yes. This is a requirement, Suman, to for the companies to state whether they have used the money for the asset. Now, whether they disclose it honestly or not, it's up to them. Uh, and there is responsibility on the part of auditor in this respect also. So when we will be doing reporting part, then we will be discussing this also. When we will be doing a chapter on audit report, then we shall be taken as on. Yes, Nakul, you are saying how to memorize audit procedures, reading or writing. So, rather, who is this? Nakul, yes, Nakul. While remembering audit procedures, again, Nakul, remember first of all, you understand the nature of item to which these audit procedures are being applied. First, you understand the meaning of that item. If you understand what that particular item to which audit procedures are to be applied, what does it mean, what it is, then you can easily write audit procedures. You will not need to, you will have no need to cram the things. So you by studying this chapter or by studying chapter 4, you have understood many audit procedures. So first of all, you see what is the nature of item, what kind of procedures are applicable to such item. Do not say close your module and keep in your mind borrowings. Okay, then ask from yourself how I am going to verify borrowings. What do borrowings mean? Borrowings mean loans. So loans which the company has taken. So if a company has taken some loan, then how I am going to verify it? Obviously, there would be some kind of document available with the company, like a loan agreement, like a sanction letter, under which that particular facility has been given. So obviously, I would see that. I would see confirmation from bank. It would be again a logical step. Exam. Say in exam, you will be asked to write not more than 3 or 4 procedures because questions are of 3 or 4 marks only. Okay, remember. And if you are finding it difficult to write, or if your writing is poor, then you can practice it by writing also. Okay. So additional regulatory requirements, because these are written so in Schedule 3. So for disclosures, for each item, there are separate disclosure requirements, but the end certain additional requirements are there. Okay. Material means significant differences. So if there are significant differences between the statements filed by the company with the bankers and its books of accounts, then these material discrepancies. So it's good if you have done charge, guys. Yes, you have been told about various forms also. So these forms have different functions. So the most important form is CAG. Yes, parts. You are talking about that point relating to uh, investing of money. So students, you have to remember it, you have to understand it this way. Say if a company has given money to some another entity, another person, which we call as intermediary. Okay, so the intermediary is not the final beneficiary. He is a middleman. He is investing the money on behalf of the company. Okay, so who is the ultimate beneficiary? Ultimate beneficiary disclosures are to be given, which is there in your module, that how much money was given, what is the date. Okay, and similarly, if the company has received such money from any other person with the understanding that the company would invest the money further into some other bodies on behalf of that intermediary, then disclosures relating to these have to be disclosed also. Okay. Yes, Sham Goel, you are saying, though I understand whatever is there in book, yes, that's the problem with many guys, Sham Goel. That their problem is that they clearly understand that what is being told to them, but they are unable to write. Now ask from yourself why you are unable to write. Because you are short of words. You do not remember words. So how to write? The logical course would be to remember the things. So unless you things and do this process continuously, repeatedly, for 3 times, 4 times, you would see the results, Shamgul. Try this methodology. This is a time tested methodology, and many students have benefited of writing the answers. Yes, study material because it is substantially changed. Yes, Suman Goel, now you have become perfect. So others other students are responding to you, Sham Goel. So again, problem of buffering. Yes, guys, now this buffering problem is big for Yes, welcome back, guys. So I hope audio video should be clear now. So whether we can say that client company is not ultimately beneficiary in both the case. So Manish, you have to understand that in first case, the company has advanced money to somebody else. The understanding that money would be invested on behalf of the company. So in this case, the company is the ultimately beneficiary. The company which we are talking about is the ultimate beneficiary. The company which we are talking about when with the understanding to invest the money on behalf of that funding party, then who would be the ultimate beneficiary? It would not be the company. It would be that funding party which has provided the funds. Then if such type of things are there, then disclosures as mandated in Schedule 3 have to be made. To learn from the new study module, students do not make this mistake of relying upon the old study website. So go through those modules. Okay. Is it clear, students? So फटाफट एक बार बता दो, is audio video clear? So that we can start the new topic. Yes, students, please. Yes, guys, no mails. So I presume that audio video is clear. Nikita, you are saying that video. But this is Wi-Fi network. I don't see. I don't understand how it is happening today. So should I start? Yes, students. So students, we I sincerely hope that now you are able to hear me and the things are clear to you now. You can see me properly and the buffering problem is resolved. So today there is some connectivity problem, guys, so bear with us. So students, next Yes, tech team. हेलो. यस. ठीक हो गया क्या? Yes, guys. So I've been told that problem has now been resolved. So please confirm, guys. Please confirm that you are now able to see me and hear me, and that buffering problem is gone. Thank God. If that problem is gone, students, please confirm now. So we are starting. How does an auditor verify share capital? So obviously, the auditor would tally the period and share capital balance. So different types of share capital you already know, students. Authorized, issued, and paid up share capital. And he would reconcile. He would see what are the opening balances of authorized capital, issued and paid up capital, and he would see the closing balances. He would verify the closing balances. So if the company has issued some capital during the year, then obviously uh, it becomes duty of the auditor to see whether the company has necessary authorized capital to issue the share capital in the first instance. So so obviously, if the company doesn't have necessary authorized capital to issue further share capital, then it can't do so. So in that case, it would have to first increase its authorized share capital. Okay. So you have to see the necessary forms like SH7. There is a form SH7 which is filed on the MCA portal for alteration in share capital. So when authorized share capital is increased, so it is a notice, it is an intimation given to the registrar of companies that share capital has been increased, and the company pays necessary fees and necessary stamp duty on it by paying a challan. Okay. And if further share has been issued, the auditor would see whether necessary returns like PS3 have been filed with the ROC on MCA portal. Okay. So students, you have read about the concept of shares issued at premium. Issue of shares at premium. In your company law classes? Yes. Okay, okay. So you have read about the issue of shares at premium in your company law classes. So which section deals with this issue? Issue of shares by the company at premium. A company can always issue shares at premium. So you already know, yes, Srinivasan, you are saying. So at premium means issuing shares at more than the face value. So if the face value of share is rupees 10 and the company is issuing shares at rupees 20, so we say that company is issuing shares at a premium. Okay. So the provisions relating to issue of shares at premium are dealt within Section 52 of Companies Act. So again, students, if you remember the Section 52 requirements, your topic is done here. You need not remember anything fresh. So the auditor has to see that Section 52 requirements of Companies Act have been dealt with. Okay, so and he has also to see that security premium account is applied by the company for the following purposes, like for issuing fully paid bonus shares, in writing of preliminary expenses of the company, in writing of expenses or the commission paid or discount allowed on issue of any shares of the company. Okay, like underwriting commission. So these can be used for share premium account can be used for such type of expenses, in providing for premium repayable on the redemption of redeemable preference shares and for the purchase of its own shares. When a company purchases its own shares under a buyback scheme, then Section 68 of Companies Act 2013 applies, and these things auditor needs to verify that security premium account has been applied. Account has been applied in accordance with requirements of company law requirements, Companies Act 2013 requirements. So obviously, when a company is issuing shares at premium, the premium amount is where it is going. It is going to securities premium account. So how this security premium account is to be utilized? It is to be utilized in accordance with the requirements of Section 52 of Companies Act. Okay, so these requirements are there, and if you have already remembered that how share premium account, how securities premium account is to be applied, then you need not remember again these requirements. These are specific law requirements. Okay, that security premium account is to be applied for issuing fully paid bonus shares, in writing of preliminary expenses of the company, in writing of commission paid to the company. So these kind of things, in purchasing its own shares. So the auditor needs to verify whether the premium received on shares has been transferred to securities premium account, and whether application of any amount out of said securities premium account is only for the purpose mentioned above. So students, like I have been telling you earlier, how to remember the audit procedures. So somebody was asking, Nukul, I think, was asking how to remember the audit procedures. So before remembering audit procedures, first see what is that item all about. Now you are about to write audit procedures pertaining to securities premium, if or where the shares are issued at premium. So what are the duties of auditor in this regard? What are the procedures he would employ? So for this, you have to understand that what security premium account is all about. That when shares are issued at premium, the premium amount is transferred to securities premium account. So the auditor would be concerned about two things. Number one, whether the premium received on the issue of shares has been transferred to a separate account, which is a securities premium account, and whether this security premium account has been utilized in accordance with the requirements of Companies Act 2013. These are the two things he has to verify, and these are the two things which form part of his procedures. So fairly simple. इसके बारे में students आपको कोई, you need not cram anything. These are the two audit procedures, and you need to remember the company law requirements, which you anyway would be doing as part of your preparation of company law. So this subtopic would already be done. So इतना आपको याद रखना है. You have to remember so much that it is the responsibility of the auditor to see whether share premium has been transferred to a securities premium account, and whether security premium account has been utilized in the manner provided in Companies Act 2013. Okay. So shares issued at discount. Now, can a company issue shares at discount? Yes, students. You have already done this share capital topic. Can a company issue shares at discount in your company law classes? Can a company issue shares at discount? Tell me. And what is the relevant law provision in this respect? Yes, anybody? Yes, students. Yes. So all of you are writing correctly. So a company cannot issue shares at a discount except what? Anmol, you are writing it correctly, except sweat equity shares. So a company cannot issue shares at a discount. So the provisions regarding this are contained in section 53 of Companies Act. So issue of shares at discount is prohibited under Companies Act. So any issue of shares at discount is void, except when shares are issued at sweat equity shares. So this is probably the only exception provided in Companies Act 2013 to issue shares at a discount. Okay. So as per section 53 of Companies Act, a company shall not issue shares at a discount, except in case of an issue of sweat equity shares in accordance with sections 54. So the provisions relating to sweat equity shares are there in section 54. So any share issued by a company at a discounted price shall be void. So this is important for you to remember. This is again law requirement. However, there is an exception provided in section 53. So you remember, guys, this exception, that a company can issue share to its creditors when say a company has taken a loan from a bank, and this loan is converted into shares in pursuance of a direction, in pursuance of directions, in pursuance of a debt restructuring scheme, in accordance with the RBI directions, in accordance with the RBI requirements. Then company can issue shares at discount. So this is also an important point for you to remember. A company may issue shares at a discount to its creditors when its debt is converted into shares in pursuance of any statutory resolution plan or debt restructuring scheme. So when a bank has taken when a company has taken loan from a bank, then bank becomes creditor for the company. So company has to pay back the money to the bank. So, but say the company is finding it difficult and the bank concerned has decided to restructure the debt in accordance with the RBI requirements, and in accordance with that restructuring plan, that debt is converted into shares. Part of that debt is maybe converted into shares. Then company may issue shares at a discount, but it is only in accordance with such scheme. It happens only in accordance with such scheme. It is an exception only. Okay. So how the auditor is going to verify it? He would verify the movement in share capital, whether there is any issue. If fresh capital has been issued, then he would see at what price it has been issued, whether it has been issued at face price, at nominal value, or whether it has been issued at a premium, and he would take care to see that it is not issued at a discount, except as provided for in Companies Act 2013. That is either for issuing sweat equity shares, or for or when a debt is converted into equity in accordance with debt restructuring plan. Okay, in accordance with the RBI requirements. So the auditor would verify that company has not issued any of shares at a discount by reading the minutes of the meetings of the directors. So obviously he would go through the minutes of the meeting to see what are the terms uh, relating to the issue of shares, so that he would come to know that at what price shares have been issued, what happened at the meetings of the directors, what happened at the board meeting. Okay. So in case shares have been issued at a discount to the company's creditors in accordance with the debt restructuring plan, then it has to be seen that it is in uh, accordance with the regulatory guidelines, in accordance with the directions of Reserve Bank of India. So these are the procedures. So obviously, students, if you know company law provisions relating to these, you know the procedures automatically. There is no further need to remember those procedures. It is only application of those provisions. Okay. So fair enough, students. You understand now? Yes. So issue of sweat equity shares. Now, if the company has issued sweat equity shares, so the provisions of issue of sweat equity shares are contained in section 54 of Companies Act. So sweat equity shares mean equity shares issued by a company to its employees or directors. So this you have to remember. These sweat equity shares are issued by a company to its employees or directors at a discount, or for consideration other than cash, for providing know-how or making available right in the nature of intellectual property rights. So students, yes, can you tell me what is the purpose of sweat equity shares? You have read it in section 54 of Companies Act 2013. Can anybody tell me what is the basic objective of sweat equity shares? Why a company may issue a sweat equity shares? Yes. Yes, guys, students, can anybody tell? So the procedures of auditor is to see whether the issue of sweat equity shares is in accordance with the requirements of Section 54. So you need to know the requirement of Section 54 of the Companies Act, that how sweat equity shares are to be issued, whether a special resolution is to be passed, what other requirements are to be complied with. So these things you have to write it. Yes. Yes, Srinivasan, you are saying providing technical expertise to the company. Yes, to the employees. Yes. Yes, to motivate employees to perform better. Yes, to retain good employees. Yes, all these things are correct. So the purpose of issuing sweat equity share, students, um, uh, is to give incentive to employees, is to retain employees. Okay. So say a company may not, say a startup, a company may not have enough cash in its initial years. So the salary given by the company to its employees may not be at a very high level. But the company wants to grow in future. It has the potential to grow in future. So how does it retain those employees? So obviously it has to provide them with some carrot to retain those employees, that they do not shift, they do not go to some another company, they do not opt for some greener pastures. So so if the employees are are very valuable, they are giving they are providing value addition to the company. Okay, so the company issues them sweat equity shares. These are issued at a discount or for consideration other than cash. So the auditor would see that issue is authorized by a special resolution in the company. So these are all law requirements as contained in Section 54 of Companies Act. So the issue is authorized by a special resolution passed by the company. The resolution specifies the number of shares, current market price, consideration, if any, where the equity shares of the company are listed. The sweat equity shares are issued in accordance with the SEBI guidelines, in accordance with SEBI regulations. So all these requirements which you have already studied under Section 54 in Companies Act, these all requirements he has to see. These are all ditto requirements. There is not change of even one word in these requirements, as these are contained in Section 54. Okay. So reduction of capital, students, it may so happen that a company may have to reduce capital in certain circumstances where there are accumulated business losses, or when some unsound business decisions have been made, leading to many of the investments of the company turning bad. Okay, so in such circumstances, the company has to reduce the share capital. The company may choose to reduce the share capital. So Section 66 requirements. Section 66 requirements deal with reduction of share capital. So the auditor would see whether whether requirements of Section 66 of Companies Act have been complied with. So what are those kind of requirements? Verify the meeting of the shareholders held to pass the special resolution. So reduction of share capital needs passing of special resolution, which has to be passed by 3/4 majority. Okay. So the auditor would see the minutes of the meeting, whether special resolution has been passed and whether articles of association authorizes reduction of share capital. Okay. Examine that there has been no default with respect to repayment of deposits accepted by the company. Examine the order of tribunal. The tribunal has to pass the order when share capital has been reduced. So the auditor would see all such things. And when share capital is reduced and tribunal order is passed, the registrar issues a certificate regarding to reduction of capital, which shows that the company's share capital has been reduced. Okay. So all these law requirements relating to Section 66 of Companies Act 2013 have to be seen by the auditor. Okay. And how this reduction in share capital has been reflected in the books of accounts. Obviously, assets would be written down and the capital would be reduced. So whether the reflection in the books of accounts is proper. So these kind of things. Confirm that the words "and reduced," if required by the order of tribunal, have been added to the name of the company in the balance sheet. So another kind of issue in relation to shares is, students, buyback of shares. Buyback of shares. Now the provisions regarding buyback of shares are contained in Section 68 of Companies Act. Yes, yes, students. What is buyback of shares? So as far as audit procedures are concerned, we know that auditor would see that provisions of Section 68 of the Companies Act regarding buyback of securities have been complied with. But what is buyback of shares? Yes. Yes, students, can anybody tell what is buyback of shares? Yes, and what's its purpose? Yes. Yes, guys, what is buyback of shares? Any idea? Yes, students, what is buyback of shares? In what circumstances a company may buy back its shares? Yes, purchasing its own shares. Yes, Rohan, Manish, Anmol, yes, Swati. So when a company purchases its own shares from the market, it it is known as buyback. So what is the purpose of buying back shares? Yes, purchase its own shares. When the market prices are falling, it is low. Uh, it could be the reason of buyback. Another reason of buyback is that the promoters want to increase their own stake. This may be the reason of buyback. They want to increase their own stake, so that is why they may purchase they may purchase companies shares. Okay, so obviously, uh, students, when a company buys back its shares, then obviously it has to pay the cash. So it should have funds with it for buying back the shares. So as far as auditor is concerned, he has to see that requirements of Section 68 of Companies Act regarding buyback of shares have been complied with, and there are disclosure requirements of share capital contained in Schedule 3. So these requirements, students, basically relate to that how many relate to the number and amount of shares which are reflected in the authorized capital. Say authorized capital is divided into so much shares having face value of so much. Okay. Similarly, for issued and paid up capital, number of shares issued and paid up. Okay. So a reconciliation of number of shares at the beginning, at the end of the reporting period. So this is also important requirement, that a reconciliation has to be given uh, as to a reconciliation has to be given as to the number of shares which were at the beginning of the reporting period as on 1st April and at the end of the reporting period as at on closing date. Okay, how many shares were outstanding at the beginning plus issued and closing balance. Okay. And the rights, preferences, and restrictions attaching to each class of shares. What is the class of shares? Whether these are preference shares, equity shares, what are the rights attached to each class of shares issued? These have to be disclosed separately in Schedule 3. Okay. Shares in respect of each class in the company held by its holding company or its ultimate holding company or by subsidiaries shall also be stated. So how many shares, what is the percentage of shareholding of the holding company, or what is the share held by subsidiary companies? All these things have been stated. And another important point is shares in the company held by each shareholder holding more than 4% share, more than 5% shares, sorry, more than 5% of shares, specifying the number of shares held, that it has to be separately disclosed, that how many shareholders, detail of those shareholders, name of those shareholders holding more than 5% of shares. Okay, so जो भी कंपनी की टोटल ओवरऑल शेयर होल्डिंग है उसमें अगर 5% से ज्यादा किसी शेयर होल्डर के शेयर्स हैं, तो इट हैज टू बी डिस्क्लोज सेपरेटली एज पार्ट ऑफ financial statements. It is a mandatory disclosure if a person is holding more than 5% of the shares of the company, then it has to be disclosed separately. So students, what is this? Tell me what this disclosure is an example of. Tell me what disclosure is an example of which concept used in auditing. Now थोड़ा सा स्टूडेंट्स गो बैक पास्ट इन प्रीवियस लेक्चर्स, थोड़ा सा अपने माइंड में रिवाइंड करिए. That a company is required to disclose in its financial statements shareholding of each person having more than 5% of its total shareholding. So it is an example of what? It is an example of what concept in auditing? Yes. 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 Anybody? Yes. What does it show, guys? What is the purpose of such a requirement? Yes, great. Yes, Gandhi, Harsh Singh, Suman Goel, great students. It is an example of materiality. So while doing the materiality concept, essay 320 students, we had remembered that whenever a disclosure is required under law, then it becomes material. Whenever something is required by law, then it becomes material. Okay. So similar disclosure is in relation to bonus shares. So basically the purpose of all these disclosure is to provide different information pertaining to different class of shares issued. So whenever you are remembering these requirements pertaining to share capital, always keep in mind that there are different classes of share to be issued, and obviously there would be disclosure requirements pertaining to different class of shares. So then you would be able to remember these things easily. Okay. So another important thing is a company shall disclose shareholding of promoters in the format. This is also to be disclosed that what is the name of the promoter, number of shares, percentage of total shares, and percentage change during the year. This has also to be disclosed as part of the financial statements by the company. So again, additional regulatory information, it is also given here. This we have already done, students, while doing borrowings. So it is again given here because of the fact that a share premium is involved probably. So otherwise we have already done this thing while doing borrowing. So it is again repeated here. Otherwise it has got no relevance here. Yes, students, clear? So students, again, what should be your strategy while remembering procedures regarding share capital? Keep in mind that Share capital consists of authorized capital, issued capital, subscribed and paid up. Separate information has to be given if there is any change in the share capital at the period end. If new shares have been issued, then see whether these are within the limit of the authorized share capital. If not, whether authorized share capital has been altered by filing necessary form on MCA portal, that is SH7. And see, if shares have been issued at a premium, then premium amount has been transferred to security premium account. Security premium is utilized in accordance with the requirements of the Companies Act. Okay, in accordance with the requirement of Section 52 of the Companies Act. Also remember that company cannot issue shares at a discount except in case of sweat equity shares. Remember the purpose of sweat equity shares, and what are the company law requirements for issuing of sweat equity shares in accordance with Section 54 of Companies Act. Okay. Also remember that a company can issue share at discount to its creditors in pursuance of a debt restructuring plan, where a part of debt may be converted into equity in accordance with the RBI directions, in accordance with the RBI guidelines, RBI requirements. Also see that in case of buyback of shares, provisions of Section 68 of Companies Act 2013 have been complied with. And in case of reduction of share capital, provisions of Section 66 of Companies Act regarding passing of proper resolution, obtaining of order of tribunal, and seeing the certificate issued by registrar, and verifying the entries in books of accounts. These issues have been taken care of. These issues have been addressed. Okay. Yes. So promoter means a person is involved in incorporating, promoting, or arranging funds. Yes, promoter is a person who is involved in incorporating a company. Suman Goel, who promotes the company, who founded the company. Yes. Yes. Manish, you are saying how these two sections are connected. So this Manish, this I would have to check it up, and I'll come back to you after seeing that how these two are connected. If there is any connection, I'll let you know. Yes. Okay. So that's over for today, guys. Thanks, and we sincerely express our regret for any inconvenience caused to you due to buffering of the video in between. So it is over for today, guys. See you on Friday. Thanks. Yes. चल नहीं रहा